Okay, folks, welcome to Market Wrap. It is March the 3rd. The market is now closed. Let's begin with a look at the Dow Jones Industrial Average. We had a rough day today, right? It was a very volatile session. We gapped down and we did eventually rally off the lows of the day. I sent out the morning update stating, please do not sell into the morning weakness, that we would get a rally off the lows of the day. Sure enough, we got it. And when you look at the markets on a daily basis after they closed, to see how the landscape may have changed on a technical basis, it's changed some, but it's not a market that is broken. Let's begin with the Dow Jones Industrial Average. We closed down just shy of a percentage point, and by far the worst performing index. And you'll note that the Dow Industrials, unlike the S&P 500 and the Russell 2000, has been unable to make a new high on the year versus the highs seen back in December. So they have been laggards. Now, oddly enough, volume today was very, very light. The oscillators are quite weak. You have the slow stochastics breaking down. The MACD histogram, which is a momentum oscillator, really beginning to dry up now. When you see these bars begin to decline, that's not a good sign if you're long. We closed below the lower band of this triangle formation. The bottoming tail here, marking the lows of the day, shows that we do have support at, say, 1671. A close below that level would be technically really damaging and not a good sign. Let's move on to the Dow Transports. You always want to take a look at the transports when you're looking at the Dow Jones. We remain in a very, very short-term uptrend. However, what I will point out is an observation that is not a bullish one. Note the head and shoulder setup. Left shoulder, head, right shoulder. Now, this head and shoulder setup, unlike the Dow Jones Industrial, the S&P 500, is not a well-known one. You don't hear talked about on the financial TV shows. So that means that this could quite very well end up being a bearish breakdown. Now, they talked about it with the Dow Jones. That didn't work out all that well. Not yet anyway. They talked about it with the S&P 500. That certainly didn't work out well. So keep an eye on the Dow Transports to see whether or not we break down below this neckline at the 7,000 level. A close below this level at this neckline is a very, very bearish event. If the Dow Transports gold, that probably means that the Dow Industrial Average is in a decline as well and breaking down. S&P 500 daily chart, we close below support. It's an interesting chart in that we continued to make higher highs last week, but we did so. Every day was a struggle. The days where we had higher volume, it was only a higher volume due to the fact that you had sellers come in causing these topping tails. The momentum oscillators are all really beginning to break down now. They're rolling over. Slow Stokes rolling over. MACD, note the downtrend. That's not good if you're long. However, we're at support. The low of the day was 1834. As long as we trade sideways and consolidate above that level and we do not close below that level, the markets will be fine. Was there damage done today? Yes. We broke down and closed below this support level. Not a good sign. So the line in the sand remains at 1834. The Russell 2000 fared the best out of all the indexes. It did see some damage. It closed below support after last week's key reversal. Very, very bearish event. We closed below the lower band of the rising uptrend channel. Volume, unlike the Dow Jones and the S&P 500, rose today. And it was higher volume than seen on Friday. Double top setup. I mentioned this on the week ahead commentary, the market pulse check. The double top. And now we're beginning to really roll over on the ADX line. The key is that we hold support. 116 is critical support on the IWM, the Russell 2000, of which we are short. IWM weekly chart. This is the only weekly chart I'm going to talk about, and it may mean nothing. It may be something. And the reason why I say that is because it's Monday. And anything can happen between now and Friday. And the only reason why I'm bringing this chart up right now is the fact that last week, and I mentioned this on the Market Pulse Check video, we managed to recapture the prior lower band of the rising uptrend channel, and we closed there last week. I warned of a topping tail, which implied that there were sellers above. Now, this week, we opened below the lower band. We are now trading below that upper band. We gave it up. Now, I wouldn't call it a breakout point failure because we haven't broken out. However, it's not a good sign. It's not a healthy sign. And when you take a look at your RSI, which continues to make lower highs, you need to get a little bit nervous. MACD setting up for a bull trap. It looks poised to go positive. However, meaning the black line crosses above the slow line, it looks like it's going to fail. Money flow. I've been pointing this out for weeks now. Continues to make lower highs, a bearish divergence, lower highs on Stochk RSI. If we close like this on Friday, a caution flag is on the track. The XLF, the banks did fairly well today. And quite similar to the Dow Jones Industrial Average, you might have a head and shoulders setup forming here. And here is your neckline, right here at 2090. If we get a close below 2090, that's pretty bearish. If we get a close below 2050, that's ultra bearish. And as I mentioned, quite often, you need your banks and you need the Russell 2000 to cause the S&P 500 to head higher. Absent the participation of the banks and the Russell 2000, it will affect sentiment, and it will be very, very difficult for the S&P 500 to break out to all-time highs if you do not have your banks participate. We're breaking down on the Stochk RSI, trading below the neutral level at 0.5, stalling action on MACD, breaking down on Williams percentage R. Rising down volume, not a good sign, well above average. So here's our support level at, say, 2028. We close below there. The warning flag is seriously on the track for the banks. And if we happen to break out above 2182, we will be looking to buy Bank of America. SMH, the semiconductors, good reversal today. We closed down on the day, no doubt about it. However, nice long bottoming tail, but a nice close off of the lows. Down volume was fairly high. And again, just like the banks, you have your oscillators, which are really beginning to break down now. But it's too early to call an end to the rally in the semis. I'm not ready to do that yet. The retail holders, they did the best of all. And I think it's because personal income and spending rose in Monday morning's data, and that probably helped the retail holders. The 30-year bond price, where did money rotate today from stocks, and where did it go to? It went into bonds. Note the gap up. This is a weekly chart, so that we gapped up over last week's price, and not only over last week's price, but the last high seen back in January. So a very, very bullish price action on bonds, and then they are now, in fact, outperforming stocks for 2014. The U.S. dollar, of which we are long, good reversal today, closed above the 200-week moving average. We will remain long of the dollar, and we will add to it on strength. We added BCOR, Blucora Inc. Why did we do that? There's something called relative strength, and let's not confuse it with the RSI, which is the relative strength indicator noted here or seen here. Relative strength means how did the stock perform relative to the S&P 500. Now, the S&P 500 was down all day, while BCOR spent the vast majority of the day up. It fully engulfed Friday's down day. It held support. Volume could have been a little bit better. However, it wasn't bad. We're putting in a higher low on the ultimate oscillator. Higher low off of this double bottom setup on Stochk RSI. The ADX line is very, very overbought, above 60 now. MACD, very, very mature, and it's like a coiled spring getting ready to pounce. And whenever you hear about me talking about bear traps, this is a bear trap. MACD looks to want to go positive. Investors pile in, expecting it to occur, and when it does occur, the stock pops. The trap occurs when this fails, and the stock begins to break down. It didn't do it just once, it did it twice. So usually the third time's a charm, and I think that we're going to have a successful convergence. The black line crossing above the red line, or the, as you might hear it called, the fast line crossing above the slow line. So the chart looks good. I like BCOR because of its relative strength versus the S&P 500. Now let's check out BWP. This is another stock I profiled like BCOR over the weekend on the Focus Stock video if you want to check out my detailed analysis. And why did we buy it? For pretty much the same reason as we did with BCOR. It held support. It also showed relative strength versus the S&P 500. It didn't quite put in a bullish engulfing, meaning the price action seen on Monday fully engulfed the price action seen on Friday. But still, very, very good price action. Volume was okay, still below the average daily volume, but this is a bit skewed due to this down volume seen back here. So volume was fairly good relative to historic volume bars. The oscillators continued to make higher highs. We identified this on the week ahead commentary, and it continued gaining strength today. ADX line, well above 60, very, very overbought, unsustainable. The MACD did in fact go positive. I mentioned this as a concern on the week ahead commentary. My concern was laid to rest today. It did go positive, which is fairly rare for this to occur on the first go around and after this huge, huge downtrend. Normally you get a failure and then a further breakdown in the stock, and then it attempts, like it did with BCOR, to attempt to make new highs only to fail on MACD. It didn't do that here. That's pretty bullish. So BWP looking good. GDX, of which we are long, this is the Market Vectors Gold Miners, is an investment for us. Had it closed above 26.95, we would have added to our position. It did not. We closed up on the day, but we were off the highs of the day, which caused me to stay on the sidelines because I wanted to get back involved with GORO. GORO, I'll bring up the chart now. We booked profits on GORO on Friday. It didn't perform all that well. It remains in a consolidation. If we get a breakout, we may be buyers of GORO on a short squeeze. These oscillators on both the GDX and GORO are not looking good. So I have my concerns about these names. Volume today on the GDX was good, but note how the ultimate oscillator continues to make lower lows even though we closed higher on the day. West Texas Intermediate Crude. I should have went over this earlier. This could be a problem for the market. This is a monthly chart, and we are breaking out. We broke out over February's highs. Next stop is 112.24. If we break out above 112.24, start expecting to hear some financial news chatter about oil prices taxing the American consumer, because it's exactly what it is. It will hurt the retailers because every dime that goes into the pump at the gas station is less money that's spent at JCPenney. TZA. It rallied today, but it really wasn't impressive because it sold off and wasn't able to close above this resistance level. We're probably going to see a pullback, maybe a double bottom setup on the RSI. Volume was very good. MACD looks pretty good. Let's take a look at the intraday chart. Intraday chart looks okay. Where we appear to be consolidating at the 50 level on RSI, which is bullish. I don't like the fact that both of the lines, the fast line, the slow line, or red or black, whatever you want to call it, are both trading below 50. I think that they may try to loop this back up on Tuesday. Good bottoming tails or bottoming action at the 50-period moving average. So the jury's out about how we're going to open up on the TZA on Tuesday. Let's take a look at the IWM. And if you buy the TZA, it puts you short of the Russell 2000, which is why I'm pulling up the IWM. And the 30-minute chart on IWM looks okay. Support at 116.50. You get it closed below 116.50. Look out for the lows seen on Monday. My guess is they spiked the market higher. The question is, will buyers back here, will they be looking to get made whole, and will they sell into any rally? Be careful tomorrow morning if they spike the futures higher and they're bright green. Don't go chasing the market, because what happens more often than not, and you saw it last week quite a bit, and especially on Friday with the Russell 2000, because it flashed a key reversal. What's a key reversal for new members? A key reversal is just like you saw on Friday. On the Russell 2000, we traded higher through most of the day, only to reverse, give up all gains, and close red on the day. This is a bearish key reversal. Very, very bearish price action. So in my mind, the markets were telling us on Friday they were concerned about what was happening overseas, and they priced it into the markets. And sure enough, we woke up on Monday morning to red futures. Now, as I was mentioning before, they'll probably try to spike the market. You're going to wake up, you're going to see bright green futures. Don't get excited. Don't go buying stocks based upon the futures market. Let the morning settle out, see whether or not they sell into the strength. If they don't sell into strength and the market closes strong tomorrow, well, that could quite very well mean the bull market is still alive. If they sell into the strength on Tuesday, that means that we're probably going to continue rolling over. So you need to be very, very careful and defensive. You don't like the short stocks? That's understandable. Build your cash positions, start booking some profits. Next stock up, WTER, of which we are long, Alkaline Water Company. This looked really good earlier in the day, and it's a perfect example of why I always say don't buy intraday. Wait till the final minutes of trade, because it gave up its gains, flashed a topping tail, which is fairly bearish, and I didn't pull the trigger. I didn't add more. We have a stop loss in. It's a 17 cents per share, or we may even stop out if it closes below this now, what should be support. If it closes below the support level drawn in blue, we'll probably look to get out even before 17 cents. ADX is above 55, which is fairly bullish. So we'll watch, we'll hold it, and we'll look to add on strength. A&R, Alpha Natural Resources, of which we are long. Any member that's been a member longer than 24 hours knows that I hate topping tails, and that's exactly what we got on Monday. So what does that tell me? What does Friday's bearish price action tell me? What does Monday's bearish price action tell me? It tells me that everybody that bought from this level up at 560, seen last back in October, and as far back as July, those folks wanted to sell and get made whole. So they sold into strength. We were up in the morning, yet we reversed to close lower. I wouldn't be a bit surprised to see a further pullback and find support at $5.20. If we flash a bottoming tail and 520 holds, we may look to add to our position. What kept me in the trade today was the fact that the volume to the downside was so very, very light and far lighter than Friday's down volume, which came in below average. So this sell-off, I think, is pretty much near done. If we get a further pullback, I view it as an opportunity, and we'll look to add as long as we see some bottoming action at 520. If we get a breakout in the close above $5.60, that is strength. We may look to nibble. Why am I saying nibble and not buy aggressively? It's because as you saw sellers come in as these price points were again retested and revisited, you're going to have a whole nother round of sellers looking to get made whole at these price points above. So we don't want to get too aggressive. We want to let the moving averages flattening out. 50-day moving average is beginning to flatten out. The 200-day has flattened out, and you want to see the 50-day begin to proceed higher. That causes sentiment to change, especially when the 50-day crosses above the 200-day. That gets the people in the chat rooms and the message boards all excited, and they say, wow, a bullish crossover on A&R. Those who are looking to get made whole, they may listen to that chatter. They'll sit on the sidelines, and they'll listen to the banter, and they may even buy more. But expect some backing and filling, and it's not going to be a clear, straight shot up on A&R. You will have your opportunities, so don't go chasing the stock. Arch Coal, ACI. This is a stock that was up early in the day, but like A&R, sold off. Now, we saw a tug of war between bulls and bears. What does that mean? Well, we traded higher on the day, and we traded lower on the day. And where did we close? We closed down 8 cents. But look at the volatility. So had we closed above, say, $4.50, which would be above this blue line here, I would have added to our ACI position. We didn't do that. So what we have right now is a breakout point failure. So what I want to do is I want to move our stop loss order up to just below the day's lows of $4.44 because I don't like breakout point failures. What's a breakout point failure? It's when a stock breaks out above a resistance level, in this case being the blue line, and then reverses to close back down below it. That's a failure. We don't like failures. We want winners. Volume was fairly light, so we'll hold on to it for now anyway. And that's it, folks. Listen, absent the Russians moving into eastern Ukraine, and that's a lot of what you're hearing right now, the threat of Russian troops marching into eastern Ukraine, that would be a problem. But let's face it right now, the Crimea is lost. The Russians aren't giving that back up again. They made their move. So it's checkmate on the Crimea. So I think that the markets are going to price in the fact that they're not giving it up. The Germans are not on board yet with giving the green light for sanctions. They do a lot of business. If we want to apply sanctions to the Russians, you're going to need the Germans on board. And right now, they're not on board. If the Russians move into the Ukraine, totally different story. There's supposedly a deadline imposed by the Russians set for 10 p.m. Eastern time today for the Ukrainians to give up their bases in the Crimea. I've heard rumor that that's a false statement or it's a false ultimatum. We'll see. Who knows? But if you want to put a positive and a bullish spin on this, what the Russians just did is they gave Janet Yellen the green light. They gave her an excuse to say, you know what, let's pull back on taper. Well, let's rethink this until the situation over in Eastern Europe is resolved, and then we'll revisit the resumption of the taper. The markets will take off on that news. Don't be surprised if they begin to price that into the markets. And that's one of the reasons why I added to our long positions today in anticipation of just that type of speculation, because this is not a market that is rallying on fundamentals. It is rallying on an accommodative Federal Reserve, and the Federal Reserve just may have been handed their excuse to cease taper. And that's it, folks. Enjoy the remainder of your evening. If you have any questions, shoot me an email, and I'll talk to you soon.